Hey everybody, William Tovar with the Shalhoot Real Estate Team. Since the Fed rate hike in mid-March, people are wondering if it's a good time to buy. And if you've been shopping around for a home, another rate hike will absolutely be affecting your house hunt. What people don't generally know is that this rate hike is a very good thing for the economy. When rates are low, it means that the economy is suppressed, and when rates increase, it is generally a good indication that the economy is going to be doing better. Right now, we still have great rates, historically speaking, and we can expect them to go up to 5% by the end of the year. So don't keep waiting. Let's get you in a home and start watching some equity build. There's going to be some anticipated changes coming to the Dodd-Frank reform, which will mean that there's going to be new types of mortgages and access to these mortgages for buyers. One of those is known as the ARM, also known as the adjustable rate mortgage. This is a mortgage product that had a bad reputation after the Great Recession due to a high amount of foreclosures on this type of loan. But the loan works by giving a borrower a fixed interest rate, usually slightly below the market rate, for the first 5, 7, or even 10 years. After that, the rate adjusts to the current market rate annually. Depending on what is happening with your interest rates and your home equity over the period of your fixed rate, this could be either a very good or a very bad option. If you're sure that you'll be living in your home for fewer years than your fixed rate period, an ARM may be a no-brainer. You get a lower mortgage rate, and you've sold a home before you ever see the rate adjust up. In markets where you can expect solid appreciation in the coming years, like San Diego, this can be a great option. It's unlikely that we will see lower interest rates in the coming years, so don't bank on refinancing this mortgage at a lower fixed rate. Instead, plan to leverage your equity when you refinance. At the end of your fixed rate term, you can refinance only your remaining principal. If you have made payments that exceed your monthly minimum mortgage payment and your home has appreciated in those years, you may have exceeded 50% or more of your principal paydown. So you'll be able to refinance the remaining principal on a 15 or a 30-year fixed rate mortgage, and you may be able to lower your payments despite higher interest rates at that time. Another option for buyers is a second mortgage. This loan works essentially by splitting your mortgage into two separate loans. One loan will typically be for 75 to 80% of the purchase price, and this is known as your first mortgage. It's a typical convention mortgage. And the second mortgage comes when you take out a HELOC, also known as a home equity line of credit, for 10 to 15% of the purchase price. And the remaining 10% will be your cash down payment. So the advantage of doing this is that you can avoid paying PMI, private mortgage insurance, which is both an upfront fee and a monthly fee that is paid every month to anyone that has not put down 20% on their mortgage. PMI insurance benefits the bank that services your loan in case of a default and or foreclosure, but it does not contribute to paying down your principal, and it is not deductible on your taxes. Another advantage to having your second mortgage in the form of a HELOC is that a HELOC is an open line of credit that uses your home as a security instrument. For example, if your original HELOC is for $30,000 and you have paid off $10,000, you can write yourself a check for any amount up to $10,000 for any reason. Tuition payments, purchase a car, pay off some debt, go on vacation. A HELOC is very much like a low interest credit card. But when you receive it, it arrives maxed out on your home purchase, and it needs to be paid down before you have any room to use it. So consumer confidence in the housing market is high. The competition is going to be fierce out there, especially if inventory picks up at the expected pace. Multiple offers are very common right now, and without an expert real estate negotiator who knows the importance of writing clean offers and counter offers, it'll be difficult to get in the home of your dreams. So if you have any questions, check us out, shalhootteam.com. Visit us on Facebook. Have a great day, and I hope to see you soon, or hear from you, or any of those things.